Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a strong rejection off of the 21 to 23 support. And at this point, heading into the open, we know that the buy side has been dominant here in the overnight session. Overall, the markets are set for a directional move. And depending on how the market reacts to the initial resistance zone, we'll have a very good idea of which side is really in firm control. So a couple of things to keep in mind. The Russell throughout this entire recent balance has been fairly strong and made it very close to yesterday's high here in the overnight session. So it's at a short-term inflection point. NASDAQ, same idea. ES, similar idea at 47.5 to 49.5, where it's at an important short-term inflection point. And today could be the day where we get some resolution on this direction. So over the last 2-3 sessions, we've seen a lot of back and forth and a lot of balancing in a wide range. And today we could get some resolution on that one way or the other. A breakout above 47.5 to 49.5 would confirm, at least on the smaller time frames here, the buyers gaining control. And if that breakout is happening and coinciding with the Russell breaking out above yesterday's high, then even though we have resistance at 56 to 59, we may not get any reaction at that zone anymore. So if you're heading up on strong momentum, decent volume, and the Russell breaking out to new highs, then we may not get much of a reaction at 56 to 59, and at that point, ES could be headed for the 65 to 67 zone, and possibly even the 68.75 to 69 and 70 quarter to 72 quarter. So we'll have to gauge how that move is taking place in real time. 47.5 to 49.5 is really the active resistance, the main area of resistance this morning. And if the market's going to fail, then that's the area that it needs to hold below in order for that to happen. And if we get a breakout above it, then we could be looking at just continuation back up towards the recent highs, or at least up towards 65 to 67. So that 56-59 zone calls for caution, and the only time that a short over there would make sense is if we saw some very clear-cut signs signaling a failure intraday. On the downside, we have pre-market support 36 quarter to 38 quarter. Holding above that signals that the strength that we've seen here in the overnight session is still intact, and we would give slight edge to buyers above pre-market support. Below that, we have 32 quarter, 33 half. That's a zone we'll have to gauge as the market approaches it. Then the gap fill at 29.50 and initial support 26 half to 28 half as an area where responsive buyers can defend. But again, if we are seeing a strong failure in the other markets and specifically the Russell, then we have to be careful at these lower support zones, because we have to make sure that the market is not going completely directional to the downside. So the thing with today is that there is that potential for directionality in the markets, like I said, one way or the other. So if you're getting strong downside momentum and the pattern that we've had in place here starts to fall apart a bit, and it looks like the range could be broken on the downside, then we just need to be careful, because it's not simply about identifying good trade location to take the trade, but there needs to be a good enough target to justify the risk on the trade. So as you're approaching these support zones below, especially below pre-market support, the question is, are we still in a balanced environment? Are we still in a very two-sided market where a rejection at initial support can result in at least a 6 to 8 point bounce? Or as the market's coming down, is it building up so much resistance that the target becomes questionable? The 20 quarter 23 area we're going to use as the bull bear zone. That is an important inflection point in the market, essentially the bottom of the current developing balance and an important high volume node at 1923. So if 20 quarter or 23 gets taken out, then we're looking at a balance breakdown type scenario. Now, the only thing with that is that the move below 20 quarter 23 would have started at a fairly high price. So as the market breaks 20 quarter 23, it could be short-term exhausted into 08 quarter to 10 quarter, which can still result in a decent bounce. Same idea at 03 half to 05 half, and especially at 97.75 to 1900, because at that point you would really be exhausting the range potential of the day. So in the event that the market breaks the bull bear zone and goes directional down into 08 quarter to 10 quarter, or 97.75 to 1900, that can result in a decent bounce simply because the market would be temporarily oversold and very exhausted. And that area could mark the end of the short-term move at least. It doesn't mean that the whole market has to reverse, but we can get a decent enough bounce off 97.75 to 1900 and possibly even 08 quarter to 10 quarter. And then, we have some big support at 88 to 90. So right now, heading into the open, the main idea is that the market has been balancing in a wide range, and because the markets are at decent inflection points, we could get some directionality today. And if we do start seeing signs supporting that idea of a sustained directional move, then we have to be careful with fading that move and try to get on board. On the other hand, if there isn't really any sign supporting a directional move, let's say momentum is very mediocre and there's really no conviction one way or the other, then the market is continuing to be stuck in a range and stuck in a balance. So right now, like I said, going into the open, we are giving more edge to the buy side because of the recent strength in the Russell and the strong rejection off of the 21 to 23 area here in the overnight session. So we know buy side is dominant heading into the open. We just have to look for signs that support continuation. Are we continuing to get decent upside momentum? Is the market holding pre-market support, right? If it's really going to break out, then ideally you want to see it holding pre-market support. And we're just going to look for signs of directional conviction on the day time frame today. And once we see those signs and the scenario becomes a bit more confirmed, then it's going to be better to focus on trades in that direction until the market reaches the next major inflection point. And on the downside, 20 quarter 23 is really going to be an important area now. So those are our main ideas heading into the open. Let's see if the strength we've seen here in the overnight session can really sustain and the buyers can maintain control. Keep an eye on the Russell. Like I said, it's balancing near yesterday's high, so it's kind of gearing up for a directional move one way or the other. And we are going to continue to give edge to buyers here. But if we start seeing downside momentum, then be ready to flip that bias. So those are the main ideas. Let's see if the buy side can maintain control here, and we'll take it from there.